It's backed by on-chain data and expert predictions that are lighting up X right now. Picture this. XRP has been consolidating after teasing that $3 mark, but according to fresh insights, whales and institutions are positioning for a breakout. Take this tweet from crypto analyst Steph is Crypto, who's got thousands following her takes. She posted today about XRP showing a huge liquidity cluster right in that $3.50 to $4 zone, with the next stop potentially at $5 or higher. That's the kind of cluster that absorbs sell pressure and catapults prices when buying momentum hits. Why does this matter? Liquidity like this acts like a trampoline for price action. Once we breach it, FOMO kicks in and we could see rapid gains. But wait until you hear how this ties into broader predictions. It's going to blow your mind. Building on that, let's zoom out to the technicals. XRP's chart is screaming bullish patterns. We've got moving average crossovers, weekly time frame that echo the epic runs of 2017 and 2020. Analysts are drawing parallels to those cycles where XRP lagged early but exploded late. For instance, one post from Boracay Hub highlights how negative sentiment and stagnation often precede massive rallies, predicting a potential 100,000% surge based on XRP's utility in cross-border payments. Yeah, you heard that right, 100,000%. That's from low fees, speed, and real-world adoption via XRP ledger. If you're thinking, but Conrad, is this realistic? Hang tight, because we're about to. Rumor is exploding across the crypto world that's got everyone walking. Imagine this. XRP, currently sitting at $3.05, could be on the verge of a parabolic surge to $5, $10, or even $26, according to top analysts. But is this just hype, or is there real fire behind the smoke? Stick around, because I'm diving deep into the breaking details, fresh from today's X posts, and by the end, you'll see why this could change everything for your portfolio. This is insider info you won't find anywhere else. Let's break it down. First off, remember, this is not financial advice. I'm just sharing the latest buzz and analysis for educational purposes. Always your own research. Now, let's get into it. The big rumor kicking off frenzy is centered around a massive liquidity cluster forming between $3.50 and $4, signaling what could be the next explosive leg up for XRP. This isn't some random speculation. It's backed by on-chain data and expert predictions that are lighting up X right now. Picture this. XRP has been consolidating after teasing that $3 mark. But according to fresh insights, whales and institutions are positioning for a breakout. Take this tweet from crypto analyst Steph is Crypto, who's got thousands following her takes. She posted today about XRP showing a huge liquidity cluster right in that $3.50 to $4 zone, with the next stop potentially at $5 or higher. That's the kind of cluster that absorbs sell pressure and catapults prices when buying momentum hits. Why does this matter? Liquidity like this acts like a trampoline for price action. Once we breach it, FOMO kicks in and we could see rapid gains. But wait until you hear how this ties into broader predictions. It's going to blow your mind. Building on that, let's zoom out to the technicals. XRP's chart is screaming bullish patterns. We've got moving average crossovers on the weekly time frame that echo the epic runs from 2017 and 2020. Analysts are drawing parallels to those cycles where XRP lagged early but exploded late. For instance, one post from Boracay Hub highlights how negative sentiment and stagnation often precede massive rallies, predicting a potential 100,000% surge based on XRP's utility in cross-border payments. Yeah, you heard that right, 100,000%. That's from low fees, speed, and real-world adoption via the XRP ledger. If you're thinking, but Conrad, is this realistic? Hang tight, because we're about to integrate more real-time community reactions that make this rumor feel inevitable. Now shift.
This is how you buy crypto in seconds, not minutes. Step 1, download. Step 2, you don't need a step 2.
Step 1, shut the fuck
Now
up.
shifting to export takes. A German analyst just bullish on XRP.
If you want to win this sick rolling tray, hit me up in the comment section or hit me up in my Instagram DM, and the number is 27.
Hitting a new all-time high around
Send me a 27 into my Instagram and you can win this sick tray from Official Genius.
As key catalysts. Think about it like this. XRP is the Ferrari of payments. Fast, efficient, and now with regulatory clarity from Ripple's wins, it's revving up for the race. This tweet's already racked up hundreds of likes and retweets, sparking debates in the replies about whether we'll see $4 by week's end. What if this breakout happens sooner than we think? That's the FOMO fuel keeping viewers like you glued, and trust me, the best is yet to come. Let's keep energy rolling with more from the X trenches. Oski Mons X, a local XRP holder, dropped a bombshell post emphasizing multi-year chart patterns where old peaks become new support levels. He's calling for a parabolic surge to $26 once we smash through $3 resistance, fueled by DeFi platforms on XPL, potential ETFS, and US regs clearing up. The comments are wild. People sharing their HODL stories, predicting $9 to $25 by year end. It's that community spirit that's turning this rumor into a movement. But here's a mini cliffhanger. What if whale movements confirm this? Stay with me. Diving deeper, CryptoKylo's update today reveals XRP supply on Coinbase has plummeted 90% as whales yank tokens off exchanges. Analysts are whispering about a super squeeze that could rocket us to $10 if momentum holds. This is huge. Less supply on exchanges means less selling pressure, setting the stage for volatility in our favor. Pair that with Alpha App's sentiment analysis showing bullish options, data, and open interest nearing $1 billion, and you've got a recipe for surge. Social channels are heating up. Institutional flows are ramping. If you're
Good morning, gang. Happy Thanksgiving morning to you. It's that
The
time.
fuck
It's
up.
Christmas shopping season.
You fuck.
If you're visualizing this on your charts, imagine XRP breaking free like a rocket escaping gravity. That's essential here.
This is pretty cool.
But let's not ignore the longer-term visions. Jacko Lau posted about an analyst predicting a 773% rally to $26.63, but then topped it with his own call for $20 plus by October 2025. He's basing it on historical fractals and XRPL growth. RippleTrack echoes this with breaking news on the liquidity wall at $3.50 to $4, paying $5 plus breakout, and their volumes are surging. These aren't isolated opinions. They're converging into a narrative that's got the XRP army mobilized. What if regulatory tailwinds, like clearer paths for ETFS, supercharge this? That's the exclusivity I'm bringing you. Fresh, data-backed alpha straight from today's feeds. Now, around the 8-minute mark, let's address the elephants in the room, the myths and doubts that might be holding you back. If you're doubting this surge like most skeptics are, thinking XRP just teased $3 and pulled back, you're not alone.
Go.
Longneck's Tower tweeted about that rug pull feel, with whales dumping and ledger activity dipping. Crypto Alert Satoshi Watch warns the rally might stall with big investors selling, risking a drop to $2. Valid points, right? But here's the counter. These dips are classic shakeouts before major moves. History shows XRP thrives post-consolidation, and with rate cuts looming at 99% probability, as UK Miller and others note, retail panic is the real hurdle. If you're feeling the pain of volatility, remember, utility will win out. XRP is not a meme, it's infrastructure. Debunking the myth that retail is the problem, no, we're the power. Hodl through and watch value shift to real volume. Building to the climax. What if all this aligns? Picture XRP hitting that liquidity cluster, breaking $4, then surging to $5 Analysts in Smelly Reno's post see wild gains from utility alone. The excitement's rising. Community reactions are off the charts, with Maxi and Charlie Ward amplifying a $5 plus call. This rumor isn't just talk. With ETF launches this week, as Alva mentions, and predictions stacking up, XRP could redefine altcoin seasons. This changes everything. Stick around for the close. Wrapping up on this uplifting note, we've unpacked the rumor of XRP's massive liquidity push, expert breakouts to $3.90, surges to $5 plus, and moonshots to $26. Key wins, regulatory clarity,
What the
win
fuck?
plays, and XRPL adoption positioning XRP
not only do we see the markets pricing in a 90 market, right? Why do rate cuts matter? Well, right now we have a record amount of money sitting in money market funds. So essentially money yet to be deployed. Essentially, if you have hundreds of millions, billions, trillions of dollars, right, and you can get a guaranteed rate from the United States government of 4.5 to 5%, well, that's pretty good, right? You can really just get free money from the United States government by doing nothing if you have a whole bunch of cash. So a lot of people are deploying that cash that they have idle into money market funds where they can get a steady 4 to 5% and not have to worry about anything. Now, this is going to stop if the Federal Reserve cuts rates. If the Federal Reserve cuts rates and rates come down to 2.5%, 3%, 1.5% long term, then people aren't going to be as incentivized to hold money in these money market accounts. Therefore, that money is needing to go somewhere, and typically and historically, that goes right into the market. People, once they're not getting their 4.5 to 5% guaranteed, they say, okay, well, I'll just go get that in assets, right? I'll just go invest in a broad index or different equities or different risk investments, funnel that money into the market so that I can get my percentage elsewhere. One of the places historically that really benefits from this is things like cryptocurrencies. Things like Bitcoin and XRP historically have performed extremely well in lower interest rate environments, which looks to be where we're headed. Now, the really good news is despite the fact that we've been in a high interest rate environment, things like XRP have still performed outstandingly well. So even though all the macro is against XRP is still performing phenomenally. So just imagine what's going to happen once we have actual United States Federal Reserve policy in line with allowing XRP to reach these new highs. In my opinion, this is an extremely bullish setup. XRP performed really well all through this high interest rate environment, purely because the fundamentals are so good. But we really didn't have the economy on our side. We really didn't have the global money flows helping things out. It was actually kind of hurting us. But that's about to change in a really big way if we do get rate cuts tomorrow. And we're actually projected to get 2 more rate cuts, even if we get a rate cut tomorrow, towards the back half of the year. If we can go into an interest rate environment 2.5 to 3%, that is going to allow a lot more money to be invested into the cryptocurrency market and be a massive growth catalyst for something like XRP. With that said, though, it looks like people are already preparing for this. If you take a look at what's happening on Coinbase right now, which is fascinating, we are actually watching almost a 90% decline in the amount of XRP on Coinbase in the past 90 days. Right now, people are forecasting a huge breakout on XRP, ripping it off the exchanges, purchasing all the XRP Coinbase has, and then leaving Coinbase. This shows that these people are obviously in a position where they have no intention on selling the XRP anytime soon. Now, there's a lot of reasons this could potentially be happening, but some of the most obvious ones would be the fact that we are right around the corner from the first XRP spot ETF going live. This is expected to go live this week. Now, we don't have an actual date yet for this to go live. I would expect it to go live either tomorrow or Thursday. I don't think it's going to go live on Friday, but we're expecting to get the first XRP ETF this week. And I don't think it's any coincidence that people are rushing to get XRP off the exchanges and drain the exchanges of XRP prior to this going live. We're seeing initial estimates of about 8 billion coming into these ETFs over the course of the year. And just taking a look at the XRP market cap multiplier calculator, this would give us a price of XRP easily in the double digits. So what we're seeing and what we're preparing for is a very significant move for XRP based off of all these different indicators. Now, taking a look at the XRP price chart, this is signaling as well that it's ready for a move. XRP has been stuck in this consolidation pattern since the early part of July and really just tightening up and coiling up. This is a really, really good sign, guys. This is one of the most bullish things you really see for XRP. You see these highs getting lower, and you see these lows getting higher. XRP coiling up until the price gets super compressed. press. Now, it might bounce around in here for a couple more days, but ultimately, all of these bullish catalysts, I believe, is going to send us flying to the upside. Right now, there's not XRP on exchanges to even sell. All the XRP is being bought and siphoned off. People see the catalyst coming in terms of the XRP spot ETF, as well as all the British developments in the market, and a pro-cryptocurrency United States. XRP as a US-centric cryptocurrency, and this is causing a lot more people to be interested in purchasing XRP. I even actually highlighted the Bitcoin Maximals podcast on the channel last night, where essentially these Bitcoin Maximals were getting together and say, hey, I'm actually bullish on XRP now. The tides are changing dramatically. For the longest time, the market was essentially a one-trick pony. All there was Bitcoin. If you talk about anything else, oh, well, that's a scam. You shouldn't touch that. But people aren't looking at things like that anymore. All the new people coming into the market are looking for something that actually does something that has real-world utility, something that's going to be impactful. Because that's how these people invest, right? When you come from traditional finance, they don't just pick a ticker because they like the name and say, this is a new form of money, right? That's not how things work. They look at the fundamentals. They look what that company is doing. They look at the product. They look if that product has product market fit. They look if that product is going to work and be usable and has a moat. These are all things you can apply to XRP, which is why there is such a big demand for XRP. It ticks all these boxes. It's exactly what these people are used to, and it's easy for them to build a bullish case around XRP because of these things. So when you go and look at these huge fundamental improvements for XRP over the past year alone, and compound that with the fact that we're about to go into an interest rate environment that is going to be very favorable for XRP, it's very easy to come to a conclusion that XRP right now is positioned in a place that is ultra bullish with all these different news catalysts. The only thing that I think could potentially be negative is if there was some massive cryptocurrency blow up. Now, I don't see anything right now that has me worried about that. Bitcoin's too high for MicroStrategy to be a problem. And the other thing is I think there might be some trouble in the cryptocurrency market for people like Circle if interest rate comes down. I think there might be some issues with some of the DeFi yield protocols that are essentially just passing on money market rates to people in DeFi. A lot of those things could potentially unwind. But all of these things are too niche and not systemic enough to be a really big issue. In my opinion, right now, lower interest rates is going to be a better net positive for the cryptocurrency market than any net negative. And it doesn't look like there's too much people overly speculating on one side of the aisle, too much craze, too much mass hysteria. You don't see any of that right now. It just seems like the calm before the storm. And a lot of people have just been sitting on the sidelines completely unaware that these XRP ETFs are likely going to cause inflows far superior than most other XRP or cryptocurrency related products we have ever seen before. The ease of people to be able to go to their brokerage and purchase an XRP proxy, in my opinion, is going to be profound. And we're only going to see more and more XRP leaving the spot market at record paces, siphoned off places like Coinbase, as more and more people reach to get net exposure to XRP. If you take a look at the XRP rich list, guys, there's not a lot of people who fully understand XRP yet. In my opinion, we are still in the very early days of this thing. But that's not going to last much longer. People are really waking up to digital assets like XRP, and in my opinion, we're less than a year away from this thing really going mainstream. These XRP ETFs and a Ripple IPO have the potential to really make this mainstream. And pretty soon, everyone is going to be holding XRP. Guys, that's going to be huge. But the problem is you're not going to get the same prices you see today. The XRP rich list shows that there's a very small majority of the world who understands what's happening. I want to congratulate every one of you for being one of them. If you're watching this video and somehow it showed up on your feed and you're thinking, wow, maybe I should take a second look at this XRP thing, guys, you want to make sure you do not miss out on this revolution. Revolution of the cryptocurrency sector and what it's going to do to finance, in my opinion, is going to completely change the world, especially how the financial system operates, and I think we're a lot closer than many people truly understand.
He's a good boy. He's a comfy boy. He's a goody boy. He's a goody buddy.
We're on a mission to get 2 million people all around the world clean water. This could be one of the largest philanthropy projects in history. Team Water. Oh.
What the fuck, man? What the fuck?
Teaming up from around the globe to get clean water that will last decades to over.
I think
Let's do the bare minimum. Let's say we know ATFs are going to happen, and we're pretty much sure, we're 90% sure we're going to
it
get
was
a
on the
regular.
BTC. So,
Yeah.
I think a $10 to $13 XRP would be very reasonable. Maybe even $20, $25 XRP.
End of year or by this time next?
End of year. If we get ETFs launched this year, I think that you could see that amount of liquidity move in. I think that there's going to be other things that culminate that cause.
If you're watching this, you're like, damn, this fucking internet service sucks. It's because I'm rendering a really big file. My TV show is rendering the rough draft. I'm rendering the whole entire project, so it says like 4 hours. That's why it's kind of lagging.
If you're enjoying this content, smash that like button and let us know some of your thoughts. Brian Crypto, what's your reaction to Jake coming and saying, listen, from the ETFs alone, we're looking at a $10 XRP?
I couldn't agree with Jake more. In this case, you are spot on. I actually feel a very similar way. I've always felt like a $4 to $6, non-ETF XRP is very, very possible in this bull run. Now, when you start piling on catalysts on top of that, and let's start first with the XRP ETF one, I totally couldn't agree more. And literally, if you had asked me that without playing that video, I would have said $8 to $10 to $12, 100%. I'm in that pain zone. So Jake and I and ChatGPT apparently are on the same case. Now, what's exciting is I don't think it stops there. You know what I'm going to sound like a broken record here, but I've been telling you that Clarity Act to me is really going to be the linchpin that can drive a lot of other quit in this space that we ain't seen before. That's when it gets fun. That's when it gets exciting, and that's where it gets. It just gets irrational, human, stupid money comes in, prices go up through the roof, over speculation everywhere, and you just have to know and understand that game and how that's played, so you can take advantage of it. Now, we can be seeing, like he said, $20 to $25 XRP. Shit, we might even see, like ChatGPT is saying here, a $50 XRP. May not, in extreme cases, right? And think about what we just talked about. There's a supply shortage right now on Coinbase, for example. Imagine we've got that supply shortage coupled with an XRP launch, and then on top of that, a clearing, and then on top of that, the Fed fund rates. Holy crap! $50, not inconceivable. But again, a lot of these things, you know, we need all these things to line up. What? Could you make an argument that maybe by the end of the year, all these things start buying on each other, on top of each other? I think so. Absolutely. So I don't want to encourage people like, oh, wait for 50. No, I'm not saying that. What I'm saying is, I can see a path to $50.
I agree, Johnny, and I think it's more important than ever for people to have realistic expectations for what can happen in a bull market for the XRP community. People asked, we delivered. They were asking. What does a $1,000 XRP portfolio look like? Well, to be in the top 20% of token holders on planet Earth, you only need about $1,200 XRP. And if we get to some of these projections that Jake is predicting, well, a $32 XRP, if you have 1,200 units, that's nearly $40,000. If you have 2,400 units, that's nearly $80,000. If you have 10,000 units, a little bit more than that, we're looking at about $340,000. So again, I just want to hammer the point home. We don't need a $100,000, $250,000 XRP in order for our lives to be different. If we see a 10, 12, 30, 50, $100 XRP, the people
I'm gonna put my Cash App in the description. Y'all better send me the fucking money.
Back up the Brinks truck. They're going to be house shopping. They're going to be boat shopping. But the truth of the matter, in a more serious way, is the once-in-a-lifetime opportunity has arrived.
I'm giving you all the game right now. You can at least send me $100 on Cash App.
When XRP goes through this price explosion, that's the fireworks. That's the show. That's the moment that we have to capitalize on this. And that is why we always talk about having realistic expectations and creating a profit plan using the Merlin application that absolutely works for you. But I did want to end this video by playing another really interesting clip, because Johnny, you talked about the power of the Clarity Act being passed inside the United States. Well, there are executives at the Ethereum Foundation who feel the same way. Here it is.
People say that stablecoins were the ChatGPT moment for Ethereum, which is absolutely true, but I call it the ChatGPT 1.0 moment. The second we have the Clarity Act passed, and you can have frameworks for broader tokenization, deeply honored to testify in front of Congress about the Clarity Act, about the benefits of it, benefits of decentralization tests. It's been a surreal 6 months. But once Clarity Act passed, you're going to get ChatGPT 2.0, which is the tokenization of everything.
Boom, you heard it right there. And his emphasis is on Ethereum because he owns the digital asset Ethereum. But we understand, having a broader conception of this space, the Clarity Act is great for Chainlink. The Clarity Act is great for the XRP ledger. The Clarity Act is great for AVAX as well. So it's not just about Ethereum, it is about the tokenization of real-world assets hitting blockchains in a way we've never seen before. And to bring this all back to our initial article, we are talking about the $32 price projection that Robbie Mitchnick, the managing director at BlackRock, put out back in 2018. If you believe XRP reaches $32 in this bull run, smash that like button. If you disagree, leave a comment underneath the video. Still hit that like button anyways. But Johnny Crypto, what's your reaction here? Even the Ethereum executives are admitting the Clarity Act opens the floodgates.
I mean, that's just it. Again, everybody sees it. These people lived through 1996, 97, 98. They understand what it takes for innovation to happen in the space and for liquidity to come into it. It needs laws that allow you to innovate. Right now, our laws don't provide that clarity, i.e. the Clarity Act. And it didn't provide it back in 96 either. You and I wouldn't be talking about the internet if it wasn't for that. But thank God, because of that Telecom Act, we got the internet. And now because of this Clarity Act, we're going to get Web 3.0. We're going to get a whole new entire digital system, the way it operates. But before we get that, we're going to
I just made like 30 fucking beats and I'm about to make 30 more.
It's going to even go into things below the top 100 because this guy's going to go seeking and looking for
Sub
value.
to my music channel, Rain's Cash Topic.
XRP, Cardano, Solana, and they're all going to benefit. Almost think of it like this way. The best analogy I can give you, very simple, short and sweet. A high tide raises all boats, my friend. And yes, people will be looking out there and buying boats, and rightfully so, if they want, with their hard-earned XRP profits.
Well, Johnny Crypto, Paul Barron said it best. He said all of these positive catalysts we've been speculating on are happening here in 2025.
Well, you know, right there. I
These
think the key
motherfuckers
here
better not
is
be out
as we
there
continue
buying all
to
that
see
shit
all of
with
these
their
very
XRP.
bullish signals going forward. They seem to be piling up, and I'm just wondering why we have not seen these parabolic price moves just yet.
Well, remain patient, my friends, as the back end of this year, like we've been saying, it's about to kick off. If you enjoyed this content, smash that like button, subscribe to the new channel, and we'll see you all in the next one.
Oh, shut the fuck up. Somebody come massage me. Come on. Oh, what the fuck? Oh no.
The great divide has begun. Left versus right, centralized banking system versus decentralized banking system. Now the question
The internet will
which
always
side will you
win.
end up on? Or will you take the middle ground
Always.
and really look 30,000 foot overview and understand at a deep level what is actually happening?
So fucking deep.
This is probably the most important video I will ever do. I want you to think about at a very, very deep level and use discernment on what I'm saying. Divide and conquer. I'm going to show you how Christine Lagarde is saying we're bringing the digital euro in. They wanted to bring in a central bank digital currency. On the America side, Trump is working to dismantle the central bank. Dismantle the federal
Your mom's
reserve, bring it
digital.
underneath the government, which is not federal nor is a reserve. And since 1913, they stopped tariffing other countries and taxed us and started controlling our interest rates. But they didn't get us through taxation, they got us through inflation. And if you, as an American, can't beat inflation every year and they tell you it's 2%, but you guys realize, comment down below, you realize it's more than 2%, right? So you're putting your money in your 401k, your financial advisor's giving you 4 to 6%, and guess what? You're not even beating inflation. Here's what's about to happen. Tomorrow, if Jerome Powell says he's going to lower interest rates, your cash you're storing, your dollar is going to be worth less. They're about to print more money than you've ever seen in history. But here's the good news and the silver lining of all this. There's a systematic change in your financial system. And imagine owning the picks and shovels. Now, I'm not telling you what to do. I'm just going to tell you what I do. I built a system. There's no emotion in this. I don't care if the markets go up. I don't care if they go down. I'm long-term. I invest in companies. I invest in infrastructure. I invest in systems that I know will be here over the next 30 to 40
I invested in y'all
200 years.
bit.
I used Warren Buffett, Charlie Munger style investing. Warren Buffett and Charlie Munger, they don't care about the bull market. They're bullish about the bear market. They said it the best. The old financial models, the schooling systems and all that stuff, they don't use that stuff. They look at companies. Does a company make over $100 million? Is it sustainable? Is it going to be here? Is it going to be here? Is it going to last bull and bear markets? Warren Buffett said, if the stock market shuts down, I don't care. He's like, I'm invested in companies. What they work to do is create cash flow. That's the key. But here's the thing about the cryptocurrency industry, is everybody's trying to chase hype, they're chasing dates, they're pricing price predictions, and that's completely outside of the model of getting wealthy. Billionaires are not chasing markets. Your emotions are their profits. They have systems, they have processes, they have structure. They feed the system, they feed the process, they feed the structure, and they know that everything goes in a cycle, and they take the emotion out of it. A $20 bill does not give a shit about you. It has zero emotion. It doesn't care about you. And if it was sitting right in front of us right now, think about this. If a $20 bill was sitting right in front of us, I heard this amazing video, I think it was on Instagram. This gentleman was talking about this. If a $20 bill was sitting right in front of us, does it have emotion? No. Does it care about you? No. So if two people are sitting there, and one person picks up the $20 bill and puts it in the stock market, or puts it into a dividend stock, or puts it into XRP or Bitcoin, they're giving it energy. The other person might pick it up and go buy junk food with it, or buy, go to a strip club with it. The $20 doesn't care where it's going. We believe it's $20. You give it the energy. And here's a simple math. Money compounds every 7 years at 10%. It's the eighth wonder of the world. It's just math. There's no emotion to this. Okay? So if you know inflation is 2% every single year, and the US dollar's collapsed 96 to 97%, your job is to beat inflation. But here's the thing. It's not 2%, guys. It's much larger than 2%. So to give you some other math, your value of your dollar, you lost about 19% purchasing power since 2020 to 2024. And as you lost 19% purchasing power, we gained 800% on our XRP and 200% on our Bitcoin, crushing the math of money compounds every 7 years at 10%. So there's these moments in times where there's new asset classes that come in where you can beat the math, but it won't always be that way. What goes up must come down, and everything always comes back to homeostasis. So eventually, when these markets come into full adoption, they'll go back into the normal volatility of money compounds every 7 years at 10%, and then there'll be another boom and bust cycle. So know that it's just a wave of energy. The bull market is where you take profits. The bear market, which is coming in 2026, I don't believe these people that say we're going to go into this parabolic cycle and just keep going straight up. That's not how markets work. You will go into a bear market in 2026. There's going to be one more catalyst. I will predict this. There'll be one more catalyst, another black swan. Problem, reaction, solution. This is why I'm saying this is the most important video I've ever done. They need, I think, one more big problem to make sure they bring cryptocurrency underneath the traditional banking system. Remember, problem, whoever creates a problem, creates reaction in the people, comes up with a solution. Okay, now you got regulation coming in, traditional finance coming into digital currency. Digital currency platforms like Coinbase, Ripple, Kraken are going to become traditional banks. We need one more big catalyst, and that could be a big bear market. Oh, see, people lost tons of money. We're not going to lose money, we're pulling profits. And I'm going to celebrate when the bear market hits, just like I did in 2022, 2023, 2024. Warren Buffett style investing. So on this channel, this is not to get rich quick. It's not meme coins. There's no hype here. This is strategy. This is systems. This is discipline. This is consistency. So if you're still here, let's dive right in. I'm going to share with you some of the bullish news that still continues to come out and keeps us calm and keeps us focused. Okay, so this is Christine Lagarde, and I'll read this to you, and then we're going to listen to her. So now what's happening is Trump is putting massive pressure. We saw what Russia said. Russia's like, oh shit. Like, Trump has the fastest growing stablecoin in the world. Okay. Bo Hines stepped down to bring Tether into America. Cantor is the custodian for the US Tether. Guys, it's all connected, man. Take the emotion out. Now, Christine Lagarde is sitting here saying, oh, we need to hurry up and get a digital euro.
1 year on from the release of Mario Draghi's report on the future of European competitiveness, it remains essential to follow up on its recommendations, further concrete action, and to accelerate implementation in line with the European Commission's roadmap. Governments should prioritize growth-enhancing structural reforms and strategic investment while ensuring sustainable public finance. It is critical to complete the Savings and Investment Union and the Banking Union to an ambitious timetable and to rapidly establish the legislative framework for the potential introduction of our digital euro.
Rapid. Stablecoin Act, Genius Act, Clarity Act, rapid. It is going to come fast and it's going to come furious. Now we have a big week ahead, okay? Tomorrow, Wednesday, the Fed's rate decision, Palace press conference, FOMC projections, okay? Do you guys think, comment down below, do you think he's gonna lower rates? I'm like 50-50, man. If he doesn't, you better get prepared, man. The markets are gonna go freaking, people are gonna panic, okay? I don't know, man. I don't know. He would be a fool not to, but who knows? Who knows? So I would love to hear your comments down below if you think he's going to lower rates tomorrow. I think 50-50 that he does 0.25%. We'll see. Thursday is Bank of England's rate decision. Friday is Bank of Japan's rate decision. If everybody reduces rates, bullish. Okay, remember, no emotion. Rates go down, fiat is worth less. Assets go up. It's that simple, guys. Take the emotion out of this. Okay, just in, financial giant PayPal to integrate Bitcoin and crypto into their new peer-to-peer payment flow. These people that continue to talk about Bitcoin's going to zero, it's like, just ignore the noise, guys. Ignore it. This is the future. Bitcoin's a new gold. XRP's a new bridge currency. Take the emotion out of this, guys. Don't be tribal. Okay, here's another announcement around that. Chainlink, we're excited to announce that the first EU regulated on-chain exchange for tokenized securities, 21X, has adopted the Chainlink data standard. Live in production and powered by Chainlink runtime environment, Chainlink enables verifiable post-trade data, including last trade price, bid-ask offers, and securities listed on the 21X platform to be accessed directly. Guys, the whole system is being rewired. Don't get flooded out, guys. It's all right here. Governments, institutions, companies on the S&P are building Bitcoin treasuries. Guys, we had a treasury meeting for our company, and it's like, remember when I said money compounds every 7 years at 10%? We had our treasury meeting, so we started at a company level. So we take 20%, we run a 20% profit margin, okay? Then we have multiple companies, but for one of our main ecosystems, we run 20% profit margin on 3 of our profitable companies, and then a couple of them are still building profit. So we take 20% of the 20% and we built a treasury. Now, what's the name for it? So when I see it, I'll say clarify this. Treasury means like the overall cash, assets, dividends. So my personal strategy, we modeled at a company level, okay? So we have my personal investment strategy, we modeled at a company level. So we have a Bitcoin strategy, we have Solana, Bitcoin, XRP. I encourage them to start getting into, yes, we did, I did. Yeah, we did. World Liberty Financial. So those will be the 4 assets we own. And I'm trying to think of I'm mixing my portfolio and the company's portfolio. So we have a Bitcoin treasury. So we have our Bitcoin. We also have a dividend strategy that we get cash flow off of and we de-risk just like I do personally. And then we have our cash, right? So we have cash, so that's where the treasury is. It's around how much cash do we have? How much XRP do we have? How much Bitcoin do we have? My point behind that is a lot of companies on the S&P now are creating a Bitcoin treasury because remember I told you money compounds every 7 years at 10%. But we have high inflation, right? So if money compounds every 7 years at 10% and you're not beating inflation with your investment, you're actually treading water. Okay, so you just see you look at your portfolio like, oh, I grew at 4% this year. Well, did you? Right? Because if you exited out into cash and you have to retire, but you lost 19% purchasing power, you really didn't grow 4%. You didn't even beat the hurdle rate, right? So I like to use things personally. That's why I share my personal strategy, like Bitcoin and XRP. My Bitcoin grew 800% since 2020, as everybody made fun of me. My Bitcoin grew 200%. Bitcoin grows an average of 50% every year. So if inflation is truly about 10%, say it's 10%, with hidden inflation, say it's 10%, right? If I grew my Bitcoin by 50%, that means I beat the hurdle rate by 40%. So I'm transmuting my cash, which is inflationary, into deflationary assets that beat the hurdle rate. It's just simple math for me. I don't make it too complicated. It's just math. It's like beat the hurdle rate. So then when I'll just take you guys into this. There's other news that come out. This stuff is not that exciting, but let's get into it. Okay, so this is I just want to get you into my brain. This is how I'm not the smartest cat in the world, to be honest with you. I have severe dyslexia. What I am good at is discipline and consistency and systems. That's why I'm so attracted to Charlie Munger and Warren Buffett's strategies and Ray Dalio, right? They're very simple. That's who I study, Ray Dalio, Kathy Woods. I don't believe in hype. I don't watch the price predictions. I don't watch any of that stuff. My brain works in disciplined, consistent patterns. So I created a system, okay? Cash flow into deflationary assets. When I profit from those deflationary assets, I stuff money into my cash value life insurance for protection and compounding, which is leverage. So I have a Bitcoin bank. We'll move it over here, pop. So we pull from the deflationary assets, I pull Bitcoin into leverage category. So now I have a Bitcoin bank and a family bank in my insurance. So I just keep filling those buckets, right? And what I do is I just work to beat inflation. It's just math, okay? So just say 2%. So if inflation is 2% every single year, and you're not getting a raise that's over 2%, you're stuck, right? Your dollars, what you're getting paid in is someone else's debt, and the debt you're getting paid in is worth less, right? Okay, so they bring down inflation, fantastic. But you're still just storing your money in cash, right? Well, they're gonna lower interest rates, right? Okay, so you're gonna be able to monetize more debt, but that makes you poor. You're borrowing against your future self. You're not increasing your cash flow. You should be taking your cash, and you should be putting it into assets that appreciate, right? And it's just math. It's like, okay, mathematics, there's no emotion in this. I'm not a maximalist in anything. It's like, well, I truly believe in XRP. I believe in Ripple. I believe in XRP, the technology. I call it technology. So I believe in it. So nobody's gonna FUD me in, FUD me out, market cap, no market cap. It doesn't matter. It's like, I believe in the technology of XRP because I understand banking. So I'm like, oh, I really understand this XRP mechanism. So I buy a lot of it, right? And it's also done very well for me. And then when people are like, whoa, it's only gone from $2, $2.07, $3.40. In what markets can you grow your portfolio that much? It doesn't make any sense. And it's growing that much because it's new. It's a new asset class, right? The market's really thin. So that's our gift right now. Okay. Then Bitcoin. Bitcoin grows about 50% every single year. So I just logically looked at it. Bitcoin's like this over the past 10 years. The dollar's like this. Well, that's simple math, right? So if I believe, and I truly believe, over at least the next 10 years, we're going to keep doing this. So over the next 10 years, if the dollar keeps going down and my Bitcoin keeps up, it's just logic. It's like, okay, well, let's say Bitcoin collapses. Let's play devil's advocate, because I hear this often. Well, Bitcoin's going to zero when they find out who do. Okay, cool. Let's say 10 years from now, Bitcoin goes to zero. So here's where I'm differentiated. My money doesn't just sit there, and I'll explain. Okay, so I take my cash flow. Let me back up to 2020. So I want to repeat this over and over again because what I want you to get from this is a idiot with a system is going to do way better. Listen to what I'm saying. A genius with no plan or no system. Okay, I'm not the smartest cat in the world, but I have a system for my finances, I have a system for my spiritual walk, and I have a system for my physical walk. Okay, and I just follow it. Okay, so 2020 to 2022. I saw that my assets were growing so fast. I was like, this is not normal. Okay. I grew my portfolio from 2020 to 2022 in the bull market. I'm like, this is like, I almost made more than I would make as an executive my whole career as an executive in my retirement. I'm like, this is unnatural, right? 30 became, you guys know how it went to 6 figures and then boom, boom. But I was like, so that's when we created our Merlin. That's when we created our exit strategies, right? We're like, okay, because everybody's like, hold. I was exiting on the way up. I'm like, profit. Now I'm exiting into this cash, which is trash. I'm like, this is trash. So what am I going to do with this? So I first started my first life
This
insurance.
is trash.
You don't have to do it, but this is how I did it. I started my first life insurance policy. Okay, cool. So now I'm not in a vertical strategy. I moved into life insurance. Okay, awesome. Then I also started scaling my businesses. I had one business and I'm like, well, let me create other businesses. We created Merlin. I had businesses in information technology, attention, financial services, and education. Okay, so I scaled businesses because I heard you got to have cash flow and you got to have 7 streams of income. I don't know about that. I think now with wisdom, you got to be hyper focused, but I got into a lot of different businesses. I had mostly startups. We built them from the ground up. So it took a lot of energy. It took a lot of work, a lot of dedication, but we built them. So as the markets collapsed down, I had pulled profits, put it into insurance. I built cash generating businesses. So now cash flow is coming in. But what I didn't do is I didn't increase my lifestyle. What I did is I took my earned income and I transmuted it back into the deflationary assets. This is where I built the ecosystem. I took the cash flow and I put it in the deflationary assets that everybody was running from crypto. So I was buying at very low prices, Warren Buffett style, very low prices, very low prices, very low prices. Then I still had my little insurance bucket over here, okay? So then we go 2022, 2023, 2024. Okay, so you may be just starting out this cycle. And then Trump gets elected, boom! The second category, we got cash flow, we got deflation, skyrocketed. So I hit my first target XRP, I pulled it off. So where did we take that? To insurance. Okay, that's the first category. So now it went up and then it came back down. So then the market leveled out. So I haven't hit my exit targets. So now we're going into October, November, December. I believe it's going to go parabolic. So now I have this huge parabolic move in our assets right here. Okay, I'm going to pull profits. Remember, Bitcoin's off to the side. If you follow my stuff, it's in the leverage category. We're not touching that. That's a bank. Okay, we'll just move Bitcoin off to the side. All other cryptos, I'm exiting 50%. I think it's foolish. So everybody's in different cycles though. Like if it's your first bull market, just hold until 2030, just accumulate. I'll be in heavy profit, right? So I'm damn well gonna pull profit. What's the first step? I'm gonna stuff it into my cash value life insurance. Okay, now let me explain. Because if money compounds every 7 years at 10%, and we run a 2% inflation rate, all I have to do is beat these hurdle rates, richest man in Babylon. So then what I do is when the bear market hits in 2026, which there will be a bear market, don't let people lie to you, there will be a bear market, this will come down, markets go up, markets go down, bear and bull, it will exist. It's gonna come down, I don't know if it's gonna be 30%, 80%, I hope it's 80%. I know people don't wanna hear that, I hope it collapses because I believe in the assets that I hold. If it collapses down 30, 40, 50, 60, 80%, what do? Now, check this out. I have an insurance bank over here. I've been buying a shitload of cash flow. And now I get to buy at very low prices with leverage. So then, hurdle rate, remember money compounds every 7 years at 10%, 2% inflation. I borrow at 5 from my cash value. I borrow from the insurance company at 5% per year. Okay, 5% per year. So imagine I take a loan and I buy the dip. Very low risk because this comes off the death benefit and I don't pay it back. Okay. So now I hold and I accumulate 2026, 2027, we go back into the bull market. It appreciates. I crushed inflation. Okay, appreciates. Boom, I pay off the loan. Boop, leverage again. Bitcoin, I leverage to buy my insurance firm at 14%. Bitcoin grows 50% every year. I made 36%. It's just hurdle rates, guys. It's just math. There's only debt and there's only assets. It's just math. Okay. We're actually going to pay off. I thought it was going to be April. We actually are about to pay it off next month. So now that leverage will be back again. So what am I going to do? And I only borrow 25% of my overall Bitcoin. Okay, I do very important to low leverage on digital assets because they're like this. Okay, so you can get liquidated. So in that 25%, that'll be back next month. What's not going to take till April. We're already going to pay it off. Okay, guess what I'm going to do? I'm going to borrow again. I'm going to buy more assets. I'm going to buy more cash generating assets. And I'm going to let it pay it off. So my point is, if Bitcoin collapses next 10 years, along the way, I bought an insurance firm that's already a 7-figure insurance company, right? That's going to be a multi-million-dollar company. I own my own firm. right? I'm going to buy other companies along the way or continue to scale my companies. I have multiple companies in profit, you know, 2 are in 7 figures, one's going to have 8 figures, right? I'm going to buy more cash generating dividends. So if Bitcoin collapses along the way, I bought a shitload of cash flow and I'm stuffing it into insurance. So if the markets come collapsing down and you're in a vertical strategy where it's a 401k or just cryptocurrency, you're at the mercy of the market. You're at the mercy of the elites. I'm building a system where I'm not at the mercy of anybody. I'm at the mercy of my own decisions, actions, and behaviors and ability to beat the math. That's it. Take the emotion out of this, guys. $20 doesn't give a flying shit about you. It doesn't care about your family. It doesn't care if you can eat. It doesn't care. The markets don't care about you. That's the unfortunate thing. You're giving way too much energy to this money. Okay, you're giving way too much power to the elites. The money doesn't care about you. It's just math. And when you learn the math and you realize you're indoctrinated at a very deep level to be enslaved to this monetary system, you'll wake up to the mathematics and you'll think of money completely different. You will stop wasting money on bullshit. You will stop buying cars you can't afford to impress people you don't like. You will think about every dollar completely different. Every time I get paid, it works for me. I don't work for money anymore. That's it, guys. Take the complexity out of this. Take the emotion out of it. XRP going to $1,000 is going to change your life. It's only going to exacerbate who you currently are. So if you're not disciplined and consistent and you get a big hit in crypto, you will only repeat what you currently are. So I hope this information reaches your heart well. Take the emotion out of it. Get back to God. Honor God in everything you do. Get back to family. Touch some grass. Teach your family what you're learning. You know, be open, be vulnerable, so we're learning together. And then protect your ecosystem at all costs instead of other men's business. You're too busy working on yours. As I go deeper and deeper, I'm realizing there's a lot of geniuses with no plan. I'd rather be, well, I don't want to be an idiot, but I'll tell you what, an idiot with a plan is much better than a genius with no plan. I love you guys. Warriors! Love you, God bless you.
Fuck.
told you that XRP is on the verge of disappearing from exchanges in a way that could unleash one of the biggest supply shocks we've ever seen in financial history. We're not talking about some random theory or guesswork. I'm talking about real conditions building right now that mirror moments in the past when markets exploded beyond belief. If you've been waiting for a once-in-a-lifetime setup, this is the kind of storm you prepare for. Because what's coming next is going to catch a lot of people completely off guard. And those who aren't positioned will be left watching from the sidelines while history is made. This is not financial advice. Here's what makes this moment so insane. The S&P 500 is hitting fresh all-time highs while the Federal Reserve is about to cut rates. That almost never happens. In fact, you can count on one hand how many times this setup has occurred. The late 1920s before the Great Depression. 1965, right before a massive inflationary cycle. And 1999, during the peak of the dot-com boom. Every single time, it led to market explosions that nobody thought were possible. And now, except this time, there's a new factor in the equation: digital assets. XRP isn't just another altcoin. It's a piece of financial plumbing that global institutions are lining up to integrate. And when supply meets trillions of dollars of demand through ETFs, you don't just get a rally, you get a supply shock that rewrites the charts. And before we go deeper, let me just say this quickly. Down in the comment below this video, you'll find access to the Ultimate Millionaire Investor Guide. Find 100x stocks. It's packed with documents, images, videos, and more that show you exactly how to spot the kinds of asymmetric opportunities most investors miss. If you want to be ahead of the curve before the crowd even realizes what's happening, place to start. Check the pinned comment for it. Now, let's get into what's happening right now in these markets. The Fed is cutting rates for the first time in 2025, and they're blaming a weakening labor market for this decision. That makes this just the third year since 1996 that the Fed has been cutting rates while stocks are at record highs. Think about that for a second. We've already seen valuations push past the levels of the dot-com bubble. We're now beyond the extremes of 1929, right before the Great Depression. And yet, Wall Street is calling this justified because we're living through the largest technological revolution in 20 years.
Hold on, what?
AI on one side and cryptocurrency on the other. But here's the twist. Find 100x stocks. It's packed with documents, images, and more that show you exactly how to spot the kinds of asymmetric opportunities most investors miss. If you want to be ahead of the curve before the crowd even realizes what's happening, that's the place to start. Check the pinned comment for it. Now, let's get into what's happening right now in these markets. The Fed is cutting rates for the first time in 2025, and they're blaming a weakening labor market for this decision. That makes this just the third year since 1996 that the Fed has been cutting rates while stocks are at record highs. Think about that for a second. We've already seen valuations push past the levels of the dot-com bubble. We're now beyond the extremes of 1929, right before the Great Depression. And yet, Wall Street is calling this justified because we're living through the largest technological revolution in 20 years. AI on one side and cryptocurrency on the other. But here's the twist. Normally, the Fed cuts rates when markets are weak, when stocks are well below highs. This time, the Fed is doing the opposite. They're cutting while GDP is still growing at about 3% annually, while inflation is still running hot at 3.1% core CPI, well above target. but unemployment is creeping higher, and that's forcing their hand. The labor market is cracking. Fewer Americans are saying jobs are plentiful, and that number has dropped to its lowest level since 2021. That's why the Fed is acting. But instead of calming markets, it's like pouring gasoline on a fire. The S&P 500 just posted its 24th record high of 2024. And since the April low, it's up more than 35%. That's before rate cuts even kick in. Add liquidity to a market already partying, and you get parabolic moves. And if that weren't enough, add in the launch of altcoin ETFs, including XRP, by firms like Fidelity, BlackRock, Grayscale, and Canary Capital. These aren't small players. These are trillion-dollar asset managers with more capital at their disposal than most people can even comprehend. When they open the doors for institutional demand, liquidity pours in at a scale crypto has never seen before. Think back to what happened when Bitcoin ETFs launched. At first, adoption looked slow, but then the snowball effect kicked in, and Bitcoin rocketed higher as institutions started allocating in size. Now picture the same thing happening with XRP and other altcoins, but at the same moment, the Fed is cutting rates and the stock market is already in a euphoric rally. That's not just bullish. That's the recipe for a supply shock unlike anything we've ever experienced in crypto. And XRP has history on its side. In 2017, XRP's supply shock sent prices from just 0.20 to over 338, even peaking around 370 on some exchanges. That was a 1,600% surge, a literal 16x move, driven by retail FOMO, early bank pilots testing Lehman's cross-border tech, and the overall mania of the ICO boom. Fast forward to today, and the setup looks eerily familiar. Except this time, the catalysts are much bigger. We're not talking about experiments from banks. We're talking about full-scale adoption. We're talking about ODL moving $1.3 trillion in volume. We're talking about ETFs that literally require institutions to buy XRP off exchanges to back their products. And when exchange reserves are already dropping by more than 5%, the liquidity crunch becomes very real, very fast. Here's where it gets really interesting. Analysts are already projecting XRP could push to $6 in the short term as these catalysts collide. But that's just the surface, because in the medium term, the scramble for supply could mirror the 2017 explosion, setting up the potential for XRP to reach double-digit territory, with $20 being a realistic target if rate cuts continue into the end of the year and institutional FOMO hits full speed. Remember, we just watched XRP in the election supercycle go from $0.50 to over $3 in a matter of weeks. Those conditions were just a preview. What's lining up now could be even bigger. The thing about supply shocks is they don't announce themselves in advance. They happen suddenly, and by the time the masses realize what's going on, the move is already well underway. That's why preparation matters right now. Whether it's institutions scrambling to load up ETFs, or retail investors finally listening to their friends and family saying, I should have bought XRP earlier, the result is the same. Demand flooding in while supply on exchanges shrinks. That imbalance is what drives exponential price action. And let's be clear, the timing of all this is incredibly tight. We've got the Fed cutting rates this month, ETF deadlines hitting this month, institutions with trillions in dry powder ready to allocate, and XRP exchange reserves already declining. It's the perfect storm, and it's happening in real time. Now, imagine you're an ETF provider. You've just been approved to launch an XRP ETF. Your clients want exposure. The only way to deliver that exposure is to buy XRP directly off exchanges or through OTC deals. But if the float on exchanges is drying up, you're competing with every other institution for the same limited supply. That's when the price runs. That's when the charts start printing candles nobody thought possible. That's when history repeats itself in a way that leaves most investors stunned. And that's why we're not just looking at a possible short-term spike. We're looking at a scenario where XRP becomes one of the biggest stories in global finance in 2025. Rate cuts fuel the fire, ETFs add the accelerant, institutions strike the match, and retail provides the oxygen. Together, that's how you get a full-blown supply shock. Now, here's what most people are missing when they talk about this next move. They're looking only at the price chart. They are staring at candles, waiting for breakouts, drawing lines, and trying to guess if XRP is going to repeat its past cycles. But they're not asking the deeper question. Why is the structure of this market so different now compared to 2017, 2021, or even last year's election supercycle? Because the answer to that question tells you everything you need to know about why the next supply shock could dwarf anything we've ever seen before. Back in 2017, the entire crypto market was retail driven. There were no major institutions buying billions of dollars in tokens. There were no ETFs backed by the biggest asset managers in the world. Liquidity was shallow, spreads were wide, and exchanges weren't even close to being as professionalized as they are now. When XRP went from 0.20 to over $3, that was fueled by raw human emotion, greed, fear, retail panic buying, and FOMO hitting at full tilt. That alone was enough to send it 16x in a matter of months. Fast forward to 2025, and everything is different. Retail is still here, but now they're playing in the same market as trillion-dollar giants. You have BlackRock, Fidelity, and Grayscale positioning products that will funnel institutional capital directly into XRP. These institutions don't dabble with a few million here and there. When they allocate in scale, hundreds of millions, billions at a time. And that kind of demand doesn't just push the price up gradually. It pulls supply off the market in massive blocks, creating cascading effects that ripple through every exchange worldwide. Think about how this plays out mechanically. When an ETF is launched, it's not optional for the issuer to go out and buy the asset. They must acquire the underlying to match the shares they're selling to the public. So if retail investors, financial advisors, pension funds, or hedge funds want exposure to XRP through an ETF, the issuer has no choice but to secure XRP. The problem is, unlike stocks, there is no central supply to tap into. There's no treasury issuing more XRP shares. There's only a fixed supply, and what exists on exchanges is all that's available in real time. That's where the supply shock kicks in. Let's say
Market in the market. Market in the market, boy. Market in the market, Garrett. I'm eating today. Fuck you. Today I eat, boy. Today I eat. Today, boy. Today. Hello. Oh, okay. I see how it is. I see how the fuck it is.
Say a few $1 billion of capital decides to rotate into XRP, the ETFs, within the first few weeks of launch. That forces issuers to sweep up available tokens. As exchange reserves shrink, retail holders see prices climbing, and that sparks the second wave, fear of missing out. Suddenly, millions of new investors are rushing in, desperate to grab a piece before it goes higher. At the same time, early holders who have been accumulating for years are reluctant to sell, knowing that bigger gains may still lie ahead. That refusal to sell further restricts supply. You get a feedback loop where demand multiplies while supply freezes. That's exactly what we saw in 2017. Only this time, it's turbocharged by institutions. And let's layer on top of that the macro environment. Rate cuts are one of the most bullish tailwinds any risk asset can have. Cheaper money flows into markets. Borrowing costs go down. Liquidity expands. Every dollar searching for yield suddenly looks at crypto as a viable option. It's not a coincidence that during the dot-com boom, loose monetary policy poured rocket fuel onto tech stocks. And it's not a coincidence that when rates dropped in the early 2020s,
I just checked the laundry. It's still a little wet.
we're entering that same environment.
It should be done
But this
probably
time,
in like
it's
20
aligning with
minutes,
the launch
hopefully.
of altcoin ETFs. That's not just bullish. That's
I
historic.
ran out of socks because I ordered the laundry soap from Amazon and it never came.
Exchange reserves.
I had to go to the store today.
XRP flows have confirmed a decline of over 5% in exchange-held tokens recently. That may not sound like a lot on paper, but in practice, it's massive. A 5% reduction in float can mean billions of dollars in value being locked away from circulation. It's the equivalent of squeezing a balloon from both ends. Eventually, the middle bursts. Now let's talk about the psychology of the market. Because no matter how big the institutions are, markets still run on human behavior. Retail investors are watching this play out in real time. They've seen XRP go from $0.50 to over $3 in just a matter of weeks during the election supercycle. They've heard about the 1,600% surge back in 2017, and they're starting to realize that when XRP moves, it doesn't crawl, it sprints. That realization is what creates FOMO-driven waves. And every time one of those waves builds, it magnifies the effect of institutional buying. This is where the concept of reflexivity comes in. The idea that rising prices attract more buyers, and more buyers push prices even higher. George Soros used this principle to explain financial bubbles. And in crypto, reflexivity isn't just present, it's dominant. XRP's history shows exactly how violent this reflexive cycle can be. Once momentum builds, it feeds on itself until an entirely new price floor is established. Now, of course, skeptics will argue that XRP has been hyped before. They'll point to years of legal battles, regulatory uncertainty, or delays in adoption. But here's the difference. Those barriers are falling. The SEC case that hung over XRP for years is no longer the defining narrative. Global institutions are openly piloting and using Ripple's technology, and ETFs are pushing adoption from speculation into mainstream financial infrastructure. The narrative has flipped. XRP is no longer the asset waiting for its chance. It is now the asset with a pipeline of catalysts stacked up back to back. Let's step back and look at this from the perspective of a long-term investor. Imagine you're managing a multi-billion-dollar fund. You see an asset with a fixed supply, shrinking exchange reserves, and real-world adoption in global payments. You also see a macro environment where the Fed is cutting rates, inflation is still above target, and investors are hungry for exposure to alternatives. On top of that, you see regulatory clarity improving and ETFs being approved. Do you wait on the sidelines, or do you front-run the market and secure your position before the crowd piles in? If you're rational, you don't wait, you act. And that's exactly what's happening now. And history shows what comes next. In 2017, XRP's 1600% surge didn't happen because everyone believed in its long-term fundamentals. It happened because of mechanics, too much demand chasing too little supply. Fundamentals only added fuel to the fire. Today, we have the same mechanics, but on a far bigger stage. Instead of a few million retail investors, we now have pension funds, hedge funds, and institutions with mandates to allocate. Instead of exchanges with thin liquidity, we have global platforms ready to onboard trillions of dollars. Instead of whispers about bank pilots, we have confirmed adoption and real payment flows. So what does that mean in practice? Even conservative estimates suggest XRP could push to $6 in the near term. But that's just scratching the surface. When you factor in reflexivity, institutional buying, rate cuts, and ETF flows, the potential for a repeat of the 2017 style surge, or even greater, becomes highly probable. A $20 XRP is no longer some pie-in-the-sky dream. It's a scenario backed by precedent, backed by math, and backed by catalysts already set in motion. And remember, supply shocks don't unfold slowly. They hit hard, they hit fast, and they leave almost no time for latecomers to react. That's why positioning ahead of time has always been the key to capturing asymmetric gains. Those who wait for headlines confirming the move are already too late. Those who recognize the signals early are the ones who benefit when the crowd finally wakes up. That's where we are right now. The signals are flashing. The catalysts are stacking. The supply is shrinking. The demand is preparing to flood in. And history tells us what comes next when all of these align. We've seen it before, and now we're about to see it again. Except on a scale that could redefine what people thought was possible for XRP. The question people keep asking right now is, how high can XRP actually go in this cycle? And while no one has a crystal ball, we can look at history, supply mechanics, and the scale of institutional demand to build a realistic picture of what's ahead. The answer is that we're staring at conditions powerful enough to create exponential price action. Conditions that simply didn't exist in any prior cycle. Start with the obvious. XRP is not a new story anymore. In 2017, it was still seen as a risky experiment, a speculative bet in a market full of unknowns. In 2021, it was fighting regulatory battles, with the SEC case hanging over its head like a storm cloud. Even during the 2024 election supercycle, the question of adoption still loomed. But now, the pieces are lining up differently. Regulatory clarity is improving. Payment corridors are running real volume. And for the first time ever, institutional vehicles are being approved that make XRP accessible to trillions of dollars of capital through traditional finance. That last piece is crucial. Because ETFs don't just add legitimacy, they change the scale of demand entirely. A pension fund manager in New York or a wealth advisor in London isn't going to open a Binance account to buy XRP directly, but they will buy ETF shares through a trusted brokerage account. That simple change in accessibility unlocks an entirely new class of buyers, and every one of those shares must be backed by actual XRP purchased in the open market. Now add the macro backdrop. The Fed isn't just cutting once. If the labor market continues to weaken and unemployment ticks higher, they may have to cut multiple times into the end of the year. Every cut injects more liquidity. Every cut pushes more capital into risk assets. And every cut increases the appetite for alternative systems. Assets outside the reach of central bank manipulation. Crypto becomes the natural outlet. But here's the part most people underestimate. The compounding effect of reflexivity when both retail and institutions are buying at the same time. In 2017, we saw what happened when only retail demand surged, a 1,600% rally. In 2021, we saw what happened when retail piled into altcoins while institutions focused mostly on Bitcoin. Parabolic moves across the board. But in 2025, we're heading into a scenario where both sides will be pressing buy simultaneously. Institutions securing supply for ETFs and retail investors piling in because they don't want to miss the next big run. That's reflexivity squared. The math is staggering. Let's say just 1% of the trillions managed by firms like BlackRock or Fidelity flows into XRP ETFs in the first year. That's tens of billions of dollars in demand. And because of XRP's relatively low circulating float in exchanges, even a fraction of that demand can drive dramatic price expansion. It's not just about how much money comes in, it's about how little supply there is to absorb it. And supply is already tightening. With exchange reserves down over 5% recently, we're seeing the first hints of what's to come. Holders are moving their tokens into cold storage, unwilling to sell into rallies. Long-term believers are locking up supply. And with every token removed from circulation, the pressure on price increases when demand spikes. This is exactly how supply shocks work. The setup looks quiet until suddenly the dam breaks. When that break happens, the narrative shifts instantly. Suddenly, mainstream outlets start covering XRP's run. Financial advisors who ignored it are forced to explain it to clients. Friends who laughed at crypto start calling the people who were early. That's when the true FOMO stage kicks in. When participation isn't just about belief, it's about social pressure and the fear of being left behind. And in every cycle, that moment has marked the steepest, fastest part of the rally. So how high can XRP go? Conservative analysts are already calling for $6 in the short term. More aggressive projections put $10 to $20 as a realistic target in this bull run if multiple catalysts align. And when you look at historical multiples, those numbers aren't extreme. A 10x or even 20x move is not unprecedented in crypto. It has happened time and time again when supply shocks hit. What's different this time is the scale of capital involved. Instead of billions flowing in, we could see trillions eventually making their way into the digital asset space over the next few years. If even a fraction lands on XRP, the price impact will be massive. But beyond price targets, the bigger picture is what this represents. XRP has always been framed as a bridge asset, something that connects traditional finance with the future of digital payments. For years, that narrative felt distant, something on the horizon. Now, with ETFs, ODL volume, and institutional adoption converging, the bridge is no longer theoretical. It's being
Yo, what's up, guys? I'm just chilling.
That's why this cycle is different. That's why the supply shock is.
I had it on the cats because they were doing some funny shit.
And remember, XRP has always moved in bursts. long periods of consolidation followed by explosive rallies that redefine its market cap in weeks. We're in that pre-burst period now.
There's one inside the tube.
Skepticism, accumulation. But the catalysts are stacked. The timing is precise, and the pressure is building. When the release comes, it will be fast, violent, and unforgettable. This is the kind of moment investors look back on years later and say, that was the opportunity. That was the cycle I wish I had positioned for. Most people won't see it until it's too late, but the signs are flashing right now. History is repeating, only this time, with the institutions, ETFs, and global adoption pushing it further than before. So the question is simple. Will you be ready when the supply shock hits? And with that, I'll leave you with two quick things. Down in the pinned comment.
What's up, guys? Go ahead and type some shit in the chat. I'm reading chat.
100x stocks, packed with documents, images, videos, and more to help you spot the kinds of life-changing opportunities that most investors overlook. And if you're brand new and want something immediate, you can get free NVDA stocks from just a $1 deposit using my Robinhood link below. Don't miss it.
Don't you dare miss it, buddy. What's up with you guys, man? It's fucking hot. I want to jump in the pool, but I'm too busy. Oh my god, motherfucker. I'm editing my next TV show and it's rendering, so my internet and my computer, well, it's not the internet, it's the computer that's fucking lagging because the TV show's a pretty big file. So you know how it is. I'm giving you guys some life-changing information here. If you could read between the lines. Can you read between the lines? It's fucking hot. Type in the chat. Let's fucking go. Let's hear some. If you don't have an account, just make an account for free and then you can type in. They said it is life-changing.
Imagine making $453,000 in a single month as an affiliate marketer without relying on
Shut the fuck
Google,
up.
Facebook, or ClickBank, or creating new accounts.
Ripple and XRP are looking to reshape global.
So just so you guys know, this channel is me basically just chilling because I did hella shit, put so much energy into channels and all the shit, and they always just end up deleting my channel when it goes fucking viral. So it's whatever. That's why my name's not on the channel or nothing. This is just like a little hidden channel. So if you're watching this, welcome. This is just like a super side channel, super hidden little channel. We're just kicking it at the house. I'm reading chat. Feel like want to talk? Got any questions? Go ahead and hit me up. But besides that, we're just kicking it, and I'm over here learning shit. So if you want to learn shit with me, and if you like what you hear, just let me know during the live, and I could let you know what the name of it is and stuff.
This could send XRP even higher. We're going to talk about that and so much more. I do have a clip here from Whipple Van Duykel talking about BlackRock CEO predicts 1,000 XRP. Let's go ahead and get into this. XRP is all the money, basically. So I wanted to take a look at what you're seeing here. I took the photos here and I did throw it into Perplexity, and this is kind of what we're looking at. The phases described outline a speculative roadmap in the XRP community for how much XRP could become deeply integrated into global finance. If these phases, such as global payment rail integration, CBDC adoption, and tokenization of real-world assets are achieved, major price prediction models anticipate significant price increases for XRP, with projections ranging from $8 to $100 depending on adoption levels and scenarios. Let's take a closer look. Global payment rail integration, swift migration to ISO 20022. I might have put too many zeros in there. Sets the groundwork for real-time interoperability. XRP would need to become the primary bridge for international payments, potentially setting trillions of dollars
Good buddies.
daily instead of just messaging. So
Oh, those are good brothers.
Brad Garland's house has said that he believes in the
Hey, don't bite.
Ripple could take
Hey.
Swift's business. Now, I always thought this was a very strange number.
Be good boys.
Usually when you're saying something kind of just
Yeah, be good boys, buddy.
thought into it, it's usually like 10%, 15%, 20%, right? You round up to that.
I know you're being good. Hey, Gara.
An immense amount of research and really
Come on, Gara.
modeled this
Hey.
out.
Knock it off.
They've done the math here on kind of what they
Gara, I got you on camera being a bully.
some financial institutions that they are partnered up with.
Don't be a bully to your brother.
What kind of demand could they take away from Swift by doing this? Now, Swift has been moving to ISO for the last few years. We do know about 50% to 60% of Swift's payments right now is using ISO 20022 messaging. You still have an issue with settlement though through all of this. Of course, you can use crypto to do that through ISO enhanced data. Banks to choose to do instant payments. By November of this year, it is predicted that Swift will be on 86% of ISO 20022 payments, which means 86% of Swift's payments around the world will be through ISO 20022 messaging. So those payments will have the capabilities to settle with XRP and a few other cryptocurrencies. CBDC and government adoption, central banks exploring CBDCs are mentioned as key partners. XRP is theorized to serve as a liquidity bridge between national cryptocurrencies, which could drive massive transaction flows. Now, if you take a look around at all of the central bank testing, the name that has come up more than any other name is Ripple. The second name is probably R3, and then HBAR, and then of course MasterCard. Those are probably the top 4 names that I have seen over the last 5 years. And the reason that this is important is because you have 95% of central banks in some kind of testing or piloting or rolling out phase. Usually what they're going to do is there are 2 types of central bank digital currency. There's the wholesale version, which is central bank to bank. And there's the retail version, which is you and I go into a store, a business, and we buy something, right? So usually these countries, they want to set up a wholesale CBDC first, because then they can move value very cheaply, very quickly, for little to no cost. And then they will roll out to retail. The reason is there's a lot of pushback in the retail space for CBDCs because of surveillance and control and all kinds of things, right? So governments are really trying to figure out how they can roll this out. We do have some updates from the European Central Bank that come October next month.
What's up with you guys? What's going on today? Hey, say something. Talk to me. What's good? What's good? What's good?
They're working on all kinds of things like a digital.
I'm just fucking around. I don't care if you say anything.
AI stuff as well. We're gonna get a lot of updates. I did a whole video on this a few days ago. If you're interested in trying to get some of those updates, please take a look at that video. Tokenization of real-world assets in traditional institutions, move stocks, bonds, commodities, and real estate onto the XRP ledger. The settlement volumes could vastly exceed today's crypto market, further raising demand for XRP. We know that NASDAQ, the CEO, just went on, live, this week, said that they are going to be moving along the stock market to tokenized stocks, so the entire world can participate by, a fraction of a stock if you want to. This really is the future. future of settlement to get to T+0, which is same-day settlement. Right now, I think we're on T+1, which is one-day settlement after. But think about how much money can be saved if you're using blockchain to settle all of this value. It could be immense. And so you start to look at like what is connected to NASDAQ. Well, it's the BTC and the BTCC and all this other stuff, right? And we know that the BTCC has been working for years to go towards blockchain settlement and integration. And, you know, Ripple, XRP, XLM, HBAR, and a few others have been brought up in all of that. And there's patents too. I showed you all that already. Liquidity Hub and continuous demand. Ripple's Liquidity Hub targets institutional settlement, needs supporting a continuous, non-speculative demand for XRP at scale. Regulatory green light, market analysis agree regulatory clarity could drive a step change in price for institutional decrease. And so here is kind of what all of this could look like if everything worked out the way that this is kind of put together. This is the price estimate. This would be the market cap. And, you know, I think anybody would be extremely happy with $100 XRP or above. And there's a lot of people that think XRP should be worth a whole lot more. And, you know, I agree with you. And we'll see how all this turns out. Does the experts warn that only incremental adoption in motion now and the pie in the sky targets like 500 or 1,000 are mathematically unlikely, barring an unprecedented global liquidity shock or sudden universal settlement shift? Now, yes, there could be a day where we can't kick the financial can.
The body scanner reveals the brutal truth about your body that your regular scale will never tell you. For weeks, my scale showed I wasn't losing weight despite diet and exercise. I was about
Can't kick the financial can down the road. We print to infinity and we deal with inflation and higher prices, and our dollar has lost 25% of its spending power in the last 5 years alone. So if you had $1,000 just sitting in the bank, that $1,000 may still look like $1,000, but he's only being able to buy $750 worth of stuff. That is the problem that people are facing keeping their money in the bank, and that's why there's a lot of people that believe they put their money into certain crypto assets, that those crypto assets will go up as the value of the dollar goes down, and at least it's a hedge against inflation. All right, Simon McLaughlin, which is a really dope name. You see Uphold listed among the biggest XRP holders, but those assets belong to our customers, not us. People remember who stood strong in difficult times. This holding is built on trust, not hype. Big difference. So a lot of this crypto that we see that's sitting on exchanges is already spoken for. This is what we've been trying to tell you. There's probably only 1 billion to 3 billion XRP that's actually available for people to buy, institutions to buy. You're starting to wonder if there's ETFs get approved in numbers, right? If a dozen spot ETFs get approved, where's the XRP going to come from, right? And if there's not enough XRP, the XRP that is available will demand a higher price. Okay, fair enough? All right, here we go. Let's listen.
BlackRock CEO just dropped a bombshell. Bitcoin be 500,000, even 700,000. Larry Fink, he runs the largest asset manager in the world. $10 trillion under management. When he says Bitcoin can hit $500,000, guess what? People listen. And here's the kicker. If Bitcoin runs that high, what does that mean for XRP? XRP isn't just a store of value. It's actual financial infrastructure. It's the settlement layer for banks. BBVA, they're adopting it right now. If Bitcoin's narrative takes it to 500K, then XRP, the asset that's powering cross-border payments, hitting $1,000, well, that doesn't sound that crazy after all, now does it? Think about it. Bitcoin market cap, it could have
God.
That could send XRP parabolic. So here's the question. If BlackRock believe in the $700,000 Bitcoin, is a $1,000 XRP really that far-fetched? Drop your card below and smash.
All right, really quickly here, just to, if we're talking about a $700,000 Bitcoin, that's a 7x for Bitcoin. If XRP represents the same amount of market share that it does today, if Bitcoin goes to that number, XRP's price won't be 1,000, it will be 7x from what we're experiencing right now, so maybe $21. Now, to get to something like $1,000, you are going to need a lot of really bad things to happen in the world, and XRP and Ripple would be the solutions to fix those problems. Not saying that that's not going to happen, but even Jay Claver has come out and recently said that his price predictions of $750 or $1,000 would need to have like 6 or 7 catastrophic things happen. One is the collapse of the entire Japanese bond market, but we are starting to see that. The other would be Tether and Bitcoin collapsing itself and those people going into XRP. Now, I don't know if you think that that is going to happen. It is a far stretch for me over the next few months. I want Jake to be right more than trust me, but I just I have, you are my audience. I need to be as clear as possible with my beliefs and my feelings.
As clear as light beer.
I spend all of this time here. That's the least I need to do for you is tell you my heart, good, bad, ugly. I'm gonna give it to you. All right, Rat Kahneman posted this: Ripple's Rail purchase covered in September banking technology by FinTech Futures notes. Rail is said to be on track to process around 10% of global B2B business stablecoins this year. Now, Ripple, right? They bought
Nipple.
Rail, they bought Medico, they bought Hidden Road. These are all strategic purchases of financial infrastructure. Remember, there are thousands of banks now realizing that crypto is the future. Some of these banks were not preparing. And so there's only so many infrastructure pieces on the planet right now. And since Ripple's been in the business for the last 13 years, they know a lot of the players already. They have built relationships, and they are one of the most trusted blockchain infrastructure company on the planet, hands down. It doesn't get higher than Ripple's connections. All right, you have people leaving the government to go work for Ripple. The ex-treasurer of the United States went to the board of Ripple. There are people in Ripple's company that you're like, why are those people? Like, those are some crazy people, right? They understand that Ripple is the future of digital infrastructure, and Ripple has been making mergers and acquisitions to lock up as much of the good stuff as they can because they know it's going to be worth billions, if not trillions, over the next few decades. That's it. All right. XRP whale movement, 10 billion XRP from Upbit Exchange to Destination Wallet. What's happening behind the scenes, guys? You are seeing a lot of whales jumping in. Now, there is a lot of stuff leading up to the ETF approvals. We saw this with Bitcoin. We saw billions of dollars going into Bitcoin leading up to it. Same thing could definitely happen for XRP. All right. Stern Drew put this out. Let's just go through a little bit of this really quickly. Christine Lagarde didn't just leave the IMF. She left Ripple in the IMF. You know what? I'm going to save this for the video, guys. We got 13 minutes already. This is going to go to 20 minutes. Let me just do this on another video. I love you so much. Thank you for being here, guys. Have a fantastic day. I'll see you in the next one.
Nipple.